Wallace, author of the Hollow Man series, owner of Hollow Man Publishing, and Frank Fiore, the host of Fridays with Frank. Frank, how are you? And isn't it funny how I bring back the band again, bring people that I met years and years ago, Frank? That's the amazing thing about podcasting, isn't it, Frank?
Yeah, it is. It's really bringing a lot of people together, especially what we're doing on Fridays here. Boy, we went across the whole spectrum of guests. It was unbelievable. And now bringing on Scott, that's our first venture capitalist, so that ought to be very interesting discussion.
All right, so we have Scott Kelly on, and Frank will have discussions because he's trying to make a movie and he's looking for funding. So go figure how all the world works. Frank had someone last week talking to a director. That's what the power of the media giant. He brings people together. But let me tell you a little story about Scott. Scott had a PR firm back in the time, and he booked one of my first guests, I think on WRCT 88.3 FM. I think we went through Harrow, and that's how Scott and I met. Scott, what's going on? So kind of update us from the 15 years span since we've known each other, what's happened with you, and then we'll get into the topic.
Sure. So, 15 years ago, obviously, I ran a PR firm and was very successful in Arizona. But I went back to my roots. I went back to venture capital. I'd been in the deal business for 30 plus years, worked on Wall Street, was an investment banker in San Francisco during the dot-com boom, had some good success there. But back in the mid early 2000s, I changed Black Dog Promotions to Black Dog Venture Partners. And basically what we do is we work with early stage companies to help them fund their business, scale their business, and exit their business. And since that time, I raised about $5 billion for companies, helped 30 companies exit in addition to my own. Built a large investor syndicate, and I do that now out of St. Petersburg, Florida. So, but I also run VC Fast Pitch, where we actually have companies pitch for 5 minutes to our network of investors, and we raised about $130 million for those events. We do them both in person throughout the country, and we do online events via Zoom.
All right, so go ahead, Frank, with your first question for Scott.
Yeah, Scott. We you told us about your background but what is Black Dog Venture Partners and VC Fast Pitch? Those are your venture capital companies, right?
Yeah, VC Fast Pitch is the event I host, and Black Dog Venture Partners are our firm. Where we actually put together what are called syndicates and special purpose vehicles to put other people's angel money together and then make investments.
So let's talk about VCs really quickly, and then we'll get to Paul's question, because I like the follow up from what Frank just asked. When you talk about who needs a VC and when does a company, especially I'm, a sole proprietorship, growing leaps and bounds from a solopreneur to an entrepreneur in the last 2 years in transitioning. I've gone back and forth, but now I'm definitely an entrepreneur versus a solopreneur, and I have a team and all these different things. How does someone know they're ready for a VC, and kind of explain that process?
Yeah, that's a good question, because I'll be honest with you, the vast majority of companies shouldn't even go after venture capital, because the reality is, the cost of doing business is high with venture capitalists, and honestly, you lose control. But honestly, a lot of companies start out really just building their own business and grinding. And then in your early stages, you may go after angel investors, which aren't necessarily venture capitalists, but these are high net worth individuals that make investments from their own account and their own money. Where in contrast, venture capitalists are kind of like a mutual fund. They're investing someone else's money and they need to get a return. So I would tell you that the vast majority of companies, unless you're really trying to scale very rapidly, shouldn't pursue venture capital. But typically, a venture capital firm isn't really going to get involved in most cases until you're generating a significant amount of revenue. Prior to that, you're going to work with strategic investors, angels, high net worth people before you approach venture capitalists.
All right, Paul, go with your question.
Hi, Scott. What are some of the key points that if a person was looking for venture capital in their business plan, how would they present that to you?
Well, a couple of things. I tell people when I'm looking at an opportunity, and honestly, I see literally dozens of pitch decks in my inbox every day, and probably hear hundreds of pitches every year. It really comes down to a couple of key points that the entrepreneur has to solve. One, they have to identify the problem they're trying to solve and why it's a problem worth solving. Two, they have to identify the solution and why their solution is better. Is it faster? Is it cheaper? Three, a VC wants to know how you make money and who you're going to market to. Because putting money into a company is the easy part. Getting money out is the hard part. And then you got to talk about your exit strategy and how you are going to get out of that investment. But I find probably the most important thing is, especially when you're dealing with early stage companies, it's the team. Who are the people that can execute on the idea? There are literally millions of patents out there, millions of great ideas, but it really comes down to the people that can execute those ideas and turn it into a profitable business.
Okay. Some great stuff so far. Frank, go with your question. I mean, I'm going to go deeper into this whole VC thing because it just intrigues me. Because I remember one of my business partners in a business I had before, I learned more and more about the space industry and how they were going after VCs, because the space industry is growing, aerospace and space is growing leaps and bounds because it's specific areas that VCs really work. But go ahead, Frank, with another question.
Okay, let's talk elevator pitch.
Okay.
Okay, we all know what that is. So, what are you looking for in an elevator pitch?
Well, much like I just mentioned, is those key areas. And I tell every entrepreneur, you should have a 1 minute, a 5 minute, and a 20-minute presentation ready to go at all times. I tell entrepreneurs, don't have it memorized, have it internalized. Be able to talk about it like you've talked about it forever. And it really comes down to those things I mentioned before: understanding the problem and the solution, telling an entrepreneur about an investor, how you're going to make money and who you're going to market to, understand your competition and understand your ask. How much money are you looking to raise? What are you going to do with that money? What's going to be the use of proceeds? And what milestones can you accomplish in what time frame if you got that money?
It's almost like Shark Tank in a way.
Boy, it's a great TV
except it's a mix, a bunch of people in the venture capital versus one person like on Shark Tank.
Well, yeah, I mean, Shark Tank is great TV.
Yeah, it's fake.
Yeah. And the reality is, there's far more due diligence that has to be done.
Yeah. Oh, no doubt.
If you look at a Shark Tank episode, sure, they make a commitment on television, but the reality is the percentage of them that actually go to fruition after the taping is far less. Because again, an investor, they're investing in some cases, an idea, in some cases, an idea with a little bit of traction. So they need to do their homework, especially if you're a venture capitalist, you're investing someone else's money and they're counting on you to get a return for them. And you have to understand, venture capital is like baseball. If you can bat 200, you're pretty good. If you can bat 300, you're in the Hall of Fame. The reality is, venture capitalists, they assume they're going to lose money on the vast majority of their investments.
That's crazy.
But is that 3 are going to be the home run?
Is that like tax write-offs for them? Some of them in these venture capital deals?
It really depends on the entity. It's not so much a tax write-off as it is, you've got to place a lot of bets.
If people that become entrepreneurs and grow more and more and more are more risk takers, the bigger they get in certain ways, or success that they've had in their money in some way. Maybe they've been given the money, but meaning it's family money. But ultimately, it's just like the stock market. When you look at specifically enough, the risk that comes when you're talking about, the high risk types of stocks and all that stuff, and working with hedge funds, almost a kind of a mixture, except a little less risk in venture capital versus hedge funds. Would you say?
Well, I would say there's probably more risk in venture capital, because the reality is you're dealing with private companies. They don't get the return until there's an exit, meaning the company is sold or it goes public. Keep in mind, then entrepreneurs have to determine whether or not they want to build a lifestyle business, meaning it's something that's just going to generate revenue and give it away to their children, or they're going to build and invest a company that's scheduled to exit, be acquired by somebody, or go into the public markets. That's what venture capitalists and most angel investors are looking for. So it's even a very successful company, if it doesn't exit, in most cases the return is not going to come to the angel investor or the VC.
All right, Paul, go another question.
Well, this is fascinating, Scott. I for the first time in my life, I finally understanding in layman's terms what venture capital is all about, and I thank you for that. I don't actually have a question. I just want you to keep talking.
All right. So you don't have 100,000 questions. I'm going to take one of the people like it's Shark Tank and pitch one of my clients.
Okay.
And because he's almost made Shark Tank. It's a great product. Would this be a venture capital type thing? Or because I don't know if you got to see Scott 60-day hustle. I've already went to my client and texted him and said, you know what? The missing point, we're selling. But you know what the missing point in marketing is? You're not becoming a personal brand for yourself. And you
Mhm.
need to get out there with the product. And if you watch 60-day hustle on Amazon, anyone, and this is what I'm going to say, it's not for all entrepreneurs. It's for any entrepreneur who has a product, not a service. I was impressed as beyond belief watching 60-day hustle. I had one of the host of it on my show. So then I said, I'm going to just binge this. I binged this and I said, so many people don't want to talk about the personal brand except Gary V. But I'm going to go, Frank, do you have another question you want me to start hitting with some questions?
Yeah, I was involved with the dot-com mania, and both working for companies that got venture capital or seeking venture capital. And I pitched a couple. We started a couple of companies which we were trying to get capital for, which we didn't. But yeah, it wasn't easy. And the company, the big company that I worked with that got the capital that they needed, got it from his father. He was lucky, and then eventually they got the venture capital in. So, but what would you say to the entrepreneurs that are starting just from scratch? You got any one or two points that you can give them at this time?
Well, I would tell any entrepreneur that the best way to raise capital is to go sell something. Sell your product, sell your service. I find a lot of entrepreneurs, they step over perfect on the way to great, or vice versa. And I think the reality is that build something that somebody can buy today. You can always make improvements down the line. I think a lot of tech entrepreneurs want to wait till the technology gets perfect. Um, Microsoft doesn't wait till the technology gets perfect. They put out a software program, let the world tell them what's wrong with it, and then they
Yeah.
sell them a plugin. I think the reality is you've got to go sell, because at the end of the day, investors can't get a return on their capital until a company starts making money.
100%.
And so I would start with building a business. Years ago, I had a very prominent investor at one of my events, and they asked the question, "So Scott," or they asked the investor, "So how do I get you to be interested in my company?" He goes, "Do something interesting. I'll find out about
Mm, okay. All
We,
right. So
uh,
you ready, Frank, for this whole thing? This is going to be a product. This is what you guys got to do is tune in live or check out the podcast or whatever. I'm going to go with Wash and Jacks. Okay. My client is Wash and Jacks. I've had a couple products based clients in my industry. We're moving more media giant productions into more producing things and creating things versus that whole process of having one product. Well, this one was almost made Shark Tank, went down to the cutting edge, but it's a patent, like has a utility patent, does really good on Amazon, over 200 plus reviews. Okay. And they're jacks that go in to help the washing of an agitator that helps get more dirt out, save different things. And moms absolutely love this product beyond belief. This is the other thing people don't understand is, and I've tried this, I've been working with an Amazon expert right now. If you started a new Amazon sellers account, not sellers account, ads account, even if you want to spend millions of dollars every day, Amazon's not going to push it out till they feel that everything is in the right place, and it takes time. People don't understand that. It's not like you could go spend thousands of dollars a day on TikTok or spend $1,000 a day on Facebook. Amazon, you can't. So a lot of times your ad is going out there organically and you're getting sales. Well, this product is absolutely, in my opinion, a product, if it could get the right infusion, could blow it away. And the guy, my client, he is absolutely, he has something for teeth whitening for, he's an inventor. But I told him, you got to get on that personal brand. So what are your thoughts on something like that? Would venture capital ever look at that, or a one investor look at, if he had enough marketing dollars to put into TikTok to really go hard, go out that whole personal brand thing? They were talking about in 60-day hustle, $100,000. What would he do with that 100 grand? What are your thoughts on this? This product does so well. It sells organically very well. When I came in, it wasn't selling at all. They were doing all these other things. And I went and created the Amazon sellers page, put some good stuff together, did some organic social media, and they get sales. They're not up to the level which we had one of his distributors do before. What are your thoughts on a product like this? And would this be something that would be attractive to investors?
Well, it depends. I think the reality is I would need more information. I tell everybody that especially when you're approaching your first investor, make sure you pick smart money and connected money. I find, and I've had experiences, and many maybe on this call, you brought in someone to invest in your company and they weren't a good fit. Years ago when I started this industry, my boss at the time told me, if you ever wanted to enjoy Thanksgiving dinner, don't invest family money. Be careful about that. So what I would tell this entrepreneur is, one, put together a proper pitch deck, which truly demonstrates your opportunity.
And that's what our agency does, is we create pitch decks for people on that. Right. With my team. Go ahead.
Right. And then the reality is, and then you have to be strategic about the investor. The reality is, investing it's hunting. You've got to build a list. You've got to be strategic about who you connect with. And in the early stage, you're more than likely not going to be talking to venture capital firms. You're going to be talking to a high net worth accredited investor who maybe brings something else to the table besides the money. Maybe they have relationships. Maybe they have connections. Maybe they have experience.
Home shopping, like he's trying to get on the home shopping network, or something else that would do really, really well.
Yeah. So I think the reality is it really depends on the company, the stage they're at, and other things they're missing. Maybe they don't have good accounting. Maybe they don't have good marketing. Maybe they don't have a seasoned team of advisors. Maybe
I think it's definitely the cash flow is the thing that you put the next level together. But ultimately, that's where you're looking at. Bottom line is full marketing, and you can go out and get sales. And this is what I learned in 60-day hustle. Guess what? Did you see some of these exercises they did? Did you watch it, Scott? You got to watch it.
I have not. No.
You got to watch it. They literally, this is great for, I'm going to talk about your whole thing where you're doing those quick pitches. Every entrepreneur that's going to go pitch at your events needs to watch 60-day hustle. Because literally you pick up, they said, okay, first person to get a sale right now wins. Go. They all ran to try to get a sale for their product. They all ran to different places, picked up the phone. Hey, call this, that, and the other. Then they would do these other types of things where they went and did a live and saw how much sales they could get on a live. It was just really intriguing stuff that was really impressive. And Rudy Moore was unbelievable. And Rudy's like a top entrepreneur. He's the one that hosted it with somebody else. But it was interesting. Some other people that were from Clubhouse came on this. Forbes Riley was on the show. It was really good. It's an entrepreneur thing, but ultimately you got to go out and sell your product. It doesn't matter, or your service, and not use all these bells and whistles. People need to learn to sell. Would you agree, Scott?
Oh, I agree. I mean, I've trained 1,000 salespeople in my life, and the reality is everything starts with the sale, and nothing starts until the sale. I believe that 100%. And I think, obviously you have to be able to sell investors, but you have to sell investors on your ability to sell clients and customers.
100%. All right. So Frank, anything else to add? I wanted to go and talk about more about his events, because I'm really intrigued by those events and stuff like that. But Frank, anything else to add?
Yeah, you're familiar with that show that was on, I don't know, years ago, and they took a successful entrepreneur owning $1 million businesses and things like that, $1 billion, whatever it was. And they placed him, they challenged that he had to start with, like, I don't know, $50, right? Find a place to live and all this other stuff. But in 30 days, he had to own a company worth at least $1 million. What was the name of that company? What was the name of that show?
Was that Grant Cardone that did that? I think
Grant Cardone did it, and another gentleman did it. Unfortunately, I cannot remember the name of the show, but Grant Cardone did do that show. Yes, I don't remember the name.
Did he do it? I never.
They wouldn't put it on TV if he wasn't successful. So
Cardone would never go through that. That's an egomaniac, Grant Cardone. Would you
Yeah.
agree, Scott? I've been in rooms with him, speaking on stages with him and stuff. He has an ego, but he
Yeah.
really knows how to do his stuff. And that's the bottom line: is you got to get a mentor. So Scott, explain. I know that anyone could pitch you every day, but you have these events. Tell us more about these events.
Yeah, so about for the last 12 years, we've been hosting a VC Fast Pitch. And basically, it started out as entrepreneurs doing a 1 minute pitch in front of a room of investors that I brought in. We do a 5 minute pitch now. We have a 1 minute pitch option. And the reality is we coach these entrepreneurs to pitch to these investors. They're either on stage or online. It's a timed pitch. They get exactly 5 minutes, and then they do Q&A. And we've had some great success. Like I said, we've raised over $100 million. We hosted an event online in September, just a couple of weeks ago, and have already had three companies actually receive investment. So, and in all frankness, I didn't necessarily want to get into the pitch event business. I've been on a number of panels, many panels on different investor pitch events. We did it different. We democratized the process for entrepreneurs, meaning there's not an application process. You can register and you can pitch. We vet the investors to make sure they're qualified angel investors and venture capital firms. So, like I said, we host online on a monthly basis. Our next event is on October 10th. You can go to vcfastpitch.com and learn more about that. Starting next year, we'll go back to in-person events. We'll be doing them in Florida, Atlanta, New York, California, and around the country.
All right. Okay. And so is there an application process for this?
Yeah, but no, the basic not an application per se. You go to the website, there's details on you can register to attend, you can register to present. There's several different options at the website.
Very, very interesting. And any other projects you have going on? Any other stuff?
Yeah, we're working on a number of great companies. We have 52 companies in our portfolio. So obviously, in addition to helping them raise capital, we help them scale and build their business. We're working with it's football season. We're working with a great company called Armilla Technology, which has a new football wristband technology, which is doing really well. We have another company called Hook Security that does cybersecurity training. We've been working with them on their fundraise, and we've got, like I said, we have all kinds of projects we're working on. The thing I love about this business is it's never boring. It's always something different, always something new.
All right, Scott. Any other things to add, Paul or Frank, before we say goodbye to Scott?
I'd like to ask Scott about Neil mentioned that, I'm starting to make movies off of my novels, off of my books.
Mm-hmm.
And do venture capitalists get involved in finding people or investing in that movie?
Well, obviously movies, Frank, is a more specialized type investment.
Yeah.
Some people invest in movies for vanity. They want to be the executive producer, have producer credit. Some of them, but the majority of venture capital firms and angel investors are going to want to make sure they get a return on their money.
And that's very risky.
And that brings up a really good point. It's very important that for you, Frank, or anyone out there raising capital, that they make sure they build a list of investors that are interested in their industry and interested in their stage. The thing you don't want to do, and happens a lot, is you don't want to go on LinkedIn, find someone who has VC in their profile, connect with them, and then put a pitch deck in their inbox. You have to vet them as much as they vet you, because you don't want to waste their time and you don't want to waste your time. So I would tell you, there's a lot of resources. You can go find the right investor. You can go to LinkedIn, obviously, PitchBook, Crunchbase, Gust, a number of resources. You can do research on the right investors. So Frank, for a movie, I would tell you, research other investors that have a history of investing in movies. And then honestly, I tell you, some of the best referrals is go to someone else who's successfully financed a film and ask them the sales question that Neil probably asks all the time. Who do you know?
Yeah.
So
the last thing with VC, when is it time for an entrepreneur to become a VC?
Well, that's a good question. A lot of venture capitalists started out as entrepreneurs that had successful exits. You find a lot of companies, if they in fact get from the point where they're a startup with no money and get to a point where they sell their company for millions or billions of dollars, they typically, a lot of cases, will become the venture capitalists themselves. So they'll take the money and the proceeds of their successful exits and redeploy that into other potential startups that could be successful.
Fantastic. Best place people can go to find info on
Best
you.
place. Well, you can find me on all social media channels at Black Dog CEO. Black Dog Venture Partners is my website. And for our events, you can go to vcfastpitch.com.